You thought you would be retiring at 65? Think again. The average person today needs to work for more and more years. It's becoming impossible to retire at what used to be the average age for most people. Quite frankly, life has become too expensive. Everything continues to pile up, and the average person doesn't have the ability to keep themselves floating above water. What will you do? You came here for the truth, so let me unveil that for you. Today, I'm going to cover this topic of retirement, of savings, of investment, and it's not just for those who are near retirement. I'm going to be discussing information that involves everyone. Let's begin with this article here, out of MarketWatch. Once upon a time, Americans reached the age of 65 and retired. End of story. Nowadays, more Americans who reach the age of 65 are continuing to work and push off a traditional retirement. Across the U.S., labor force participation rates for people over 65 have nearly doubled in the past 2 decades. This is a very significant number here. We're looking at a doubling. Now, why is this the case? Has it been a change of heart? Have individuals decided that they want to work longer to keep themselves active? I do believe that this is the case for some. However, many people just can't pay the bills. So I'll show you here in just a moment some other information that goes along with this. Where seniors are staying in the workforce. You could see this chart for yourself. Minneapolis being at the top of the list. You can see this here, a whole bunch of different cities, all different states, in fact. It may be of interest to you depending on where you live. You could see that here. I think that it depends on what people are being paid and also what expenses they will incur. Every state is different. Every city is different. We've got property taxes. We've got food prices. We've got many different factors here. Cities where the seniors are staying in the workforce. This is basically a top list here where it's just interesting to note. All right. But it brings me to a very important point. And that is, what are we paying for our expenses? Whether that is our food, electricity, gasoline, what are we paying for our daily living expenses, right? They consistently rise. Millennials may not have the best reputation for financial savviness, but according to a new report released on Monday, most of them are optimistic about their future retirement plans. A new study published by TD Ameritrade found that on average, millennials expect to retire by age 56. 56. And 53% expect to become millionaires at some point in their lives. Now, they will make $1 million, but they won't be millionaires. They're not going to have $1 million in the bank. Because if you think about it, if they're getting paid $50,000, by the time they're ready to retire, they'll make that $1 million. They probably won't have much left over. All right. Look at this. Americans are spending $69 more each month to fill up their tank. The average price is about $3, looking at how much people are paying here. And analysts say that Americans are now spending 7% of their income on gas. If you make $45,000 per year, you're shelling out just over $3,000 just to put gas in your vehicle. That doesn't account for your license plate renewal, depending on where you live. That's something we have to pay for here. You have to pay for your actual, renewal of the license itself. You have to pay for the maintenance on the vehicle, the oil changes that take place. If you have a tire goes out, you got to get that done. You have to get little things done on the vehicle Everything, maybe you have to pay for parking in certain areas. You have to do this and that. It's expensive, right? That's just the car. That's just to get around. Now, you don't need to have a car to get around. You could take public transit. You can walk. You can bike. Okay, I get it. But that's what people are doing. And that's an expense. Then you have to understand what we're paying for every other expense. It has simply added up to a point the average person can't pay. They can't pay, so they can't retire. And let me be clear about this before I go on. I do believe that it's great for people to just continue to work, but they shouldn't be forced to. And I know I say this every time I mention this, but still there's comments. Anyway, Las Vegas home prices are rising at one of the fastest clips in the country, with builders fetching record dollar amounts and resale values approaching prior highs. The growth is so fast that, according to a new report, prices here are the most overvalued in the country. That is Las Vegas. That is one of the places that has seen the most rapid appreciation over the last year and a bit now, where it has even surpassed what we've seen in San Francisco. Not the price itself, but the appreciation. Okay? It has definitely percentage-wise increased quite dramatically. We also saw that in 2007. There were completely empty subdivisions. We saw the US having, I think the top was 19 million empty homes. Not exactly sure how those homes have been filled up, but we're told that there's an inventory shortage. Anyway, obviously, housing expenses continue to rise. Not just the price we pay for the homes. Look at the rent, for example, yes, but look at how much it costs to maintain the home. That has increased as well. This here I just wanted to show you. It happens to be Argentina's currency declining yet again. I told you that this is just going to get worse, but I wanted to mention this specifically because what we can see today is that the value of the currency is lost. If you look at their currency, okay, think about, let's just say the US dollar. It has $100 on there, but $100 doesn't really mean anything, because $100 100 years ago was a lot of money. Today, it's much less significant. It's going to buy you a lot less. So it's important to be always looking at this as a factor. What does your money buy? Philadelphia's soda tax is falling flat, for the city at least. The city started to tax sweetened drinks at 1.5 cents per ounce this year. Well, they went into this, decided to tax them, and they said it would bring in so much money, didn't really hit where they wanted to. But this is the silliness of how governments act. They've decided that the solution to every problem is to add tax to it. If you don't think that people should drink sweetened drinks, that's your own opinion. I don't drink this. Haven't had one of these for, I think it's been at least 10 years. But anyway, that's a side note. I see people drinking them every day. I don't care. It doesn't matter to me. If somebody wants to drink it, let them drink it. Let them have the Coke and the Pepsi and the, whatever other drinks there are today. They can have that. There shouldn't be a tax on it. It's very ludicrous to create a tax based on somebody's habits. I don't care what they do. And so this is really just used to go into that black hole of taxation again. The more taxes that are put on the people, the more enslaved they are. But of course, that's the purpose. This year is also presenting us with another big issue. You're looking at retail, you're looking at lower, even mid-level paying jobs being replaced by robotics and automation. And this year, it shows us, I believe it's Shake Shack. This fast food chain has been trying to increase productivity, and they do so by replacing the human beings with kiosks. So somebody could walk up, go to that kiosk, punch in their order. They don't have to speak to a human being. Other stores have done this as well. You can see McDonald's has done this to some degree, and other stores as well. You just go up to the kiosk, and within a minute, your food is waiting there for you. You never had to speak to a person. There's probably would be, instead of having 5 cashiers, let's say, then you would only need 1 person just to make sure everybody is doing well. And then eventually, as people get more comfortable with it, they would be not really needed at all. And this is an issue for people, especially in retirement, where they would go get that Walmart greeter job, where they would go get a job that they can do that doesn't require them to be heavy lifting, or different things that would be most suitable for people in their retirement. And unfortunately, this is going to be a thing of the past. I want to switch gears for a minute here. Top financial risks by age cohorts. What I see is high cost of living is a problem for everybody. Oil and gas prices, clearly there are certain things that when you are 60 plus, you worry about more than when you're in your 20s. Okay, that's a fact. People are just worried about different things at different points in their life. So that's the reason I show you this, and this shows you other percentages. I won't bore you with the details. Chart of the month. What are the top 3 biggest risks to your financial situation? The percentage of respondents. Here you can see that as a whole, high cost of living is the biggest thing for people, and I don't blame them. My costs continue to rise all the time, and certainly I'm not 65 plus, so I can imagine those individuals who are at that area or near that area and expect to be retiring with the pension that will be taken away at some point. That's going to be an issue for a lot of people. Holdings of family wealth by wealth group, very clear. If you are one of the 1% or higher, you're doing well. You're definitely doing well, and you're probably not very concerned about your retirement because you've got it all planned out. If you're part of the top 10%, hey, you're doing good as well. But if you're anybody else, especially in the bottom 50%, you've got nothing. You've really got nothing going on. And I would say that this is important here. Look at since the financial crisis. 51st to the 90th percentile and down. So let's put that. If you're in the bottom 90%, you were more well off in 2007 than you are 11 years later. That's what this is telling us. Anyway, that's all for this video. If you found it informative, please give me a thumbs up. If you want some more information, my books have it. But if you want some free information first, head over to my website. I've got a free e-course, themoneygps.com. You could see the e-course is going to break down how to really look at finances differently, okay? That's one place. Then you can also check out my playlist on YouTube called How to End Solutions. Got more information there. If you want the in-depth detail, the financial education you were never taught in school, then these 2 books have it all. I talk about everything you need to know to be able to manage your own finances. Then, if you still want to have somebody manage them for you, you can easily take them to the bank or wherever it is, and you can ask the right questions. So that way you are empowered, and that's what these books are trying to do. Not to make you a professional, not to make you be the next trader on Wall Street. This is so that you can be strong, that you can be knowledgeable in an area that we never learned a single damn thing all throughout school. So check those books out. The link is in the description below. It's on Amazon, and you can flip through the pages of these books for yourself. If you're not too interested in reading and you'd rather have the audiobook version of the Global Economic Collapse book, which is on the left-hand side, you can do so at themoneygps.com.